Welcome to a new episode of Once Upon a Student, a place where we uncover the untold stories of extraordinary individuals. And today we will look behind one of the most talked but least understood topics for students, venture capital. And for that, I would like to introduce you to our guest today. First of all, a big of applause, please, for Magdalena Möslinger-Gehmayr. Magdalena is the operations manager of Push VC, a Vienna-based early-stage investor focused on pre-seed and seed startups, especially in health, climate, and future of the planet solutions across Austria, Germany, Europe. And at Push, Magdalena works at the intersection of operations and investments, right where founders first meet the reality of venture capital. So please welcome to our podcast today. Our next guest is Hannah Wundsam. Please welcome on the stage. Most of you already probably know Hannah because she's the managing director of AustrianStartups and a fellow entrepreneur and Austria's leading and the director of AustrianStartups, Austria's leading startup platform and think tank for entrepreneurship. Her work focuses on connecting, educating, inspiring entrepreneurs and on making entrepreneurship in Austria feel less distant and more accessible for our generation. So, once again, welcome at our podcast. And our third guest, please welcome Michael Hofmannrichter to the stage. Big applause also for him. Michael is the CEO and co-founder of Silana, a startup rethinking how fashion production works through automation and technology. As a founder currently building and scaling a company himself, Michael brings the perspective of someone who is right in the middle of navigating growth, fundraising, and the realities behind building a VC-backed startup. Also, welcome to our podcast. Welcome to our stage. It's very lovely to have you all here with me because we have three different perspectives to the topic venture capital with us. And we hear all about funding rounds, pitch decks, valuation, exits, and for many students, also for me, it often feels like a closed room where the rules are not understandable for everyone. So today, my goal will be to open up the room a little with you together. But before we go into how funding works, how decisions are made, and what founders should know, I want to start with your personal impressions. Be honest, what did you first believe about venture capital?
Shall I go ahead?
Yes, let's go.
Good afternoon from my side. I'm pretty happy to be here and being invited to the talk today. So I graduated from the EU a couple of years ago. So I did my bachelor's and my master's here. So given that the education is pretty good with E&I and everything, I touched upon the topic pretty soon. But I guess it was that people started chatting about Bitpanda, N26, back in my days, Trade Republic, Revolut. So this was kind of what we talked about. It was unicorns. I think this is the right term for what I believe VC was. And then it comes down to big check sizes and clamor, a lot of people making decisions, big decisions, moving fast, a very dynamic industry. So, but that was, to be honest, really because the education was pretty good here in terms of what I learned about entrepreneurship and innovation. So I was pretty glad.
Thank you very much for perspective. How about you, Hannah?
For me, kind of similar. I also did my bachelor's and master's here at WU, but I remember doing my bachelor's, I heard about the term for the first time. I thought it's the only way that startups can actually finance their innovations, and only later on I understood how diverse the funding landscape in Austria is.
How about you, Michael?
To be honest, in comparison to you guys, I also did my bachelor's and master's here. I also did E&I, but I did not really care, and I actually had no idea about venture capital, and this changed a lot since my studying days, I would say. I think my biggest touch point was kind of like, the Facebook story. That was pretty cool to hear it first. And then Waterdrop was actually like the first Austrian company. Actually, they raised 100 million today, or announced it today, which is fucking crazy. that's about it, to be honest. Didn't know during my studies too much about it.
It's super interesting. But you also founded a startup then. So tell me more about that. Was it a goal in mind to raise VC capital one day, or was it just, it happened?
Okay, quick story about that. We started our company Silana during our studying days. Also already started working on it after my bachelor's in my gap year. Then did my SIMP master's here and found my working team at my days at ICANNs. So, student consultancy, wonderful group of people, really, really cool. And we just saw a big problem in the fashion industry and we wanted to follow that. Initially working on a different idea and then pivoting towards the big problems of this industry, like lead times, very dreadful environmental impact of this industry, all this stuff. And we just wanted to change that. And the startup way and also the venture capital way was in the end the only way how to pursue that problem. And that's why we ended up in that position.
It's very interesting. And Hannah, you also told us that there are like different possibilities for founders, not only venture capital. What do you think people most of the time misunderstand about venture capital?
I think it's that you need to really think about what does your business model need? What is your ambition with the venture you're building, and which funding model then actually works best and at what time? So for example, we met actually for the first time when I was in a jury for the Gründerstipendium, or at least I saw you. I don't know if you remember me from that time. And the Gründerstipendium is a great grant that is actually designed also for people in your stage. Students are the perfect target group because it's a program where you can actually get a grant while you're still working on your idea. It's a pre-founding grant. And there is a huge grant system in Austria. So the first funding you look for is not necessarily VC. First you look at, okay, what actually public money opportunities are out there that are fitting to my stage, to my idea. And then you think of, okay, what are your growth ambitions? Do you want to build something in a space where it's pace over everything, where you are in a very crowded market, you are maybe first to market, and in order to really succeed, you need a lot of money to spend on marketing, on developing that product in order to compete in that market, then VC might be a very interesting option for you because it will enable you to grow fast. If you are maybe building something where you are looking to develop something that will be there for a long time, where you actually want to also keep ownership of your product, of your company in the long term, then maybe VC might not be the best way to finance it, because you have to know that a venture capital company at some point wants to get back a return, normally within 10 years. That's kind of how funds are set up. So if you go the venture path, you also need to want to do a so-called exit at some point and sell the company or go IPO.
What's your take on that, Magdalena?
No, I second that. I don't think that VC is for everyone the right solution. So Hannah got that pretty right. I mean, as a fund, you still got the opportunity of secondaries, so you can sell your shares to someone else, to VC. We're an early stage VC, so we fund the plant that hasn't been grown yet, only the seed, and we give you the water, which is like the acronym for the capital that you get from us. And a later stage fund might just take our shares, but this is called secondary deal. So this is also an opportunity. But I definitely agree that if you get the pressure from an investor, that's definitely true. So you have to share your KPIs, but you also get the knowledge and expertise and the network from a VC, which can be quite helpful in terms of go-to-market strategy. If you want to enter a new country, that's definitely beneficial. Yeah. But I feel also you have to be the type for VC in terms of it's a people's business. You have to be coachable. Yeah, those are things that you have to fulfill at some point. But I don't know if I think we're gonna speak about that later too. So I don't want to give away too much.
Yeah, and you're as Push VC investing in early stage startups as well. What do those startups have to bring already with them in order to be attractive for a venture capital?
As I said, we're a pre-seed fund, so it's probably a bit different to a later stage fund. It could actually just be you waking up in the morning, having a wonderful idea, getting the opportunity to meet a VC at a bakery, I don't know if you will, but maybe you do, and you pitch your idea and someone is convinced and believes in you, and it's a product market fit from the right beginning. So this could be a true funding story. I think this is it's rather from a book and a story, but it could be. But then having a plan of what you want to build and a kind of path where you want to get. But for pre-seed funding, it's not about the financial side. It's really more about your skill. It's more about the founder rather than the idea, because you can pivot. So this is what we use in VC. If you change your strategy within your company, then you pivot, and the founder is just very important in that sense, because he is the leader of the team. He has to motivate the team. He has to steer the company. And if he or she is not able to do that, then the idea can be just as great, but might fail. Yeah.
So the founders are very important, yeah?
Most important.
And speaking of founders, there's a question to all of you. What are the early signs, in your opinion, that a founder or startup will probably make it?
The early signs?
Yeah.
I think you always need to look at the numbers in the end. And what is always interesting is to look at, okay, is a founding team dedicated to talking to customers to really understand a problem that they are solving? So it's all like, we're a lot talking about the idea, but when you started your story, you were like, there was something fundamentally wrong with the textile industry. You saw a clear problem that you wanted to solve. So really successful startups often don't start with the idea, they start with a problem. You said often the ideas, they pivot, they change, but often the problem that they solve then still stays. So for me, the most important thing is that whoever is building a startup is really passionate about solving a concrete problem. And then it's all about how customer oriented is this, and what is the feedback? How many interviews did the team do? How many early traction do they manage to generate? Today with vibe coding, it's very easy to build a mock-up, a first mini version of your product, and getting feedback from potential customers is much quicker possible than before. So that's what I would look at.
Michael, what's your idea on it?
I would really agree with that. I think being crazily obsessive with something is a very good sign. And this can be, like in your earlier life, this can be anything. So there are like many characteristics or traits in a sense. If you have been crazy good in a specific type of sport, or you have been playing Minecraft 20 hours a day, it can be literally anything. But I think like this, being so obsessive with something and then finding your problem, which you want to solve, is a very good sign. And I think if you go with that, especially with pre-seed, you will hit the right people with that. I think I'm not sure if I can make this advertisement, but 20 VC, I think this podcast of Harry, he is highly emphasizing on that. I think he's also a crazily obsessive person, and maybe crazy in general, different topic, but that's something I took from him. And I think it's actually quite right.
And how did you do it in the beginning? Were you already testing the idea with potential customers, or what was your process on that?
Okay, we started out with a different idea. Wanted to do a design toolkit to give every one of you the opportunity to design your own clothes. But then we saw the big problems of this industry, being that it takes actually so long for the product to arrive in Austria. So our business model, in a sense, would have never worked so early. And we had the opportunity, or like the big advantage, my co-founder Michael, his family owns the biggest fashion retail in Austria. So he knew the problem by heart because he was living in this industry for 20 years, basically, back then. And together we sat down, we said, okay, we love the team. We operate very well together. We know that we will build a cool company, but we are simply on the wrong way. And then we pivoted and really went forward with production, with automation, in order to bring back production to Austria and enable fashion production made in Europe, made in Austria for a lower price than made in China.
So you also did a lot of testing in the beginning, what idea will work out, and
we had the opportunity to talk with our customers from day one, get the feedback from Michael's family, from their producer, from everyone basically. And that was a wonderful advantage.
that's wonderful. And I'm very curious, Magdalena, also from your perspective, when a startup is then pitching to you, presenting their idea, what is really important during the pitch? Because the time is so limited, and the founders always have this pressure. Now I have to perform, and what is actually important?
Well, I think if you go for pitch with a VC, there are so many things that we look at. So you might not even have this. You don't have to fulfill the whole checklist at once. So it starts already if you are on a call or just pitch and right in front of the person, that we look in how you interact with us, yeah? Because what we are looking for is a right fit for us too. So we want to get along with you. So we don't just look for, oh, this is the idea that you pitch to us, this is the problem that you solve. It's rather, do I want to be on a journey with you for 10 years or for how long I want to stay? This has to be a fit, yeah? So if I'm in the call with a founder team or just one founder, I also look on the dynamics. I was in a call with a team comprising of 4 people, and it was just very interesting of how they interact with each other. So one of the founders was like, do you want to go ahead? Do you want to share your insights? Can you go deeper into the tech side? And I felt this is a team that works. They have the dynamics. They know how to interact. Sometimes you're in a call with 2 people and it's just super messy. One of them interrupts. One of them says, I don't know, how shall I go ahead? And this is for me, it doesn't have to be a red flag, but it gives me some kind of an ick. And I think the gut feeling is something you definitely consider as a VC, as an investor, is how you feel in that situation. But of course, we look into how do they sell. So can they convince people? Can they convince me? Is this something that could work out if they have to raise another round? Because it doesn't end at the pre-seed round. There is a seed round, there's Series A, B, C, D. I can go ahead. So they have to convince a lot of people, and they have to know how to do it. So I feel this is something we definitely look into. And then, of course, market fit. How is the product stage? Have the proof of concept? Is an MVP already in place? So there are just a lot of things, yeah.
It's very interesting. So the personal level is also very important.
Definitely, yeah.
Got you on that. And that's actually a question for you, Michael. How did your life change since getting capital to the company?
We were able to go faster. For me personally, my life didn't change. We want to pursue that, and we actually had suddenly the fuel to make it happen. But besides that, I was able to cover my own costs now, and not fuel my own personal expenses with my private money, which is good because you shouldn't be in a position where you have to worry about your financials while building a company, because building a company is tough. And I think that that was the biggest thing. We had people believing in it. We were always believing in it, and it was a good feeling, I would say. Mm-hmm. If I should go deeper, we had a tough time raising our first round. Maybe for you, when we did our pre-seed round, we talked with 200 investors, and we couldn't get a single yes. Nobody wanted to touch hardware in 2023, and this thankfully changed. But that was emotionally draining, and we learned a lot back then. But suddenly we got the first yes and everything changed. We had people believing us. We met people on Friday. They wired 700,000 on Monday then. Without meeting the full team, suddenly we had momentum and everything changed in a sudden moment and we were able to get going. 5 months later, those 200 people who actually wanted or actually declined us suddenly offered us money because people were actually saying yes and suddenly they also wanted to say yes to it. And nothing in the narrative changed, it was just momentum. And that's like, it's interesting. It's like a very emotional decision investing. And it's also like how you pitch and that kind of stuff. But it's
I'm curious about one question because I've spoken with many founders as well, and I have the feeling that every founder gives you different feedback on how to tackle financing your first round. And I got one tip that I should never send out my pitch deck to investors in the beginning. Why did this person tell me this? Because
you should never.
you shouldn't. You should not share your pitch deck until it's like super far in the negotiations, because when you once share your pitch deck with one investor, every investor has your deck somehow like that.
I think, however, it's often actually harder to get to those investors, right? Like you want to have a warm intro, ideally, and if you want to get your pitch deck actually read by an investor to go maybe from the other side, it always helps if you already have someone who knows this person and can actually introduce you. That's ideally the way your pitch deck gets into the hands of an investor. If you're not sure if your pitch deck is ready to be passed around to investors, then I would recommend to like also frame the conversation with the investor you send it to as, hey, I'm still working on this. Could you give me feedback? Could you here be a kind of mentor to me? And it's something that a lot of startups do, is to first actually ask for feedback. And there's a common saying like, ask for advice and you will get money, ask for money and you will get advice. It's very true as well with investors.
I would even go so far to say that the process itself, the fundraising process, is maybe even more important than your company. How you structure the fundraising is so important. And if we have done it right in the first time, it would have taken us 2 weeks to raise our pre-seed and not months back then.
So how would you structure it?
The thing is, we didn't have the contacts back then. So it's a different scenario now. But I wouldn't talk with investors at all. And then all at once give them the signal at one specific date that this is going to happen within the next 2 weeks. Because then they are actually forced to move. They are forced to prioritize. And then you can emotionally lure them. And it's difficult, but it's actually optimizing for the best outcome. And in the end, I think choosing the right investors is very important because you want to go the long road with them. But it's actually understanding who are the right people and getting them in at the right timing in order to make the investment happen, which is very important as a founder.
That's a very interesting insight. And is the funding landscape changing away from having only good ideas? Because you mentioned momentum, maybe customers, product development. Do you already have to actually showcase something to the investors in order to get funding right now? Or how does it work?
Yes, the landscape changed for sure. Rounds are getting bigger, the headlines are getting bigger. It's a bit crazy out there, I would say. But I think you cannot say like, this is the formula to actually make it happen. It can be a specific person because he has solved or she has solved a specific problem, and that's groundbreaking. It can be because you're growing incredibly fast. Like Phonia right now, they're going crazy. So that's a big sign. But it can also be like, okay, we're doing a totally new technology. And if you can solve this, you can change a $1 trillion industry. There are different signs for different people, and you have to find the right investors which are fitting that thesis, I would say.
And regarding that, I think it's important to know that there are different kind of investors. You were talking about being a pre-seed investor. There's VU Ignite Ventures that was mentioned in the beginning, which invests really early into startups that have a connection to this university. But then there are also people that are very much focused on impact investing. And there are people that kind of that business angels that invest their own money in order to support you. So it's important to do, it's called the due diligence, to really also understand the people or the funds that would invest in you, talk to startups that already got investment from them, and understand if you want to go into this relationship.
And also very important, one single meeting can change your whole life. Like as I mentioned, this 700K from Friday to Monday, that was life-changing because this was really the moment when the company was getting started. We were able to hire, we were able to get people in. Suddenly, like, people saw how fast we can go, and this was like the enabler for the next step. And you have to take this energy with you because it can be draining, but you always need to be on, like, they need to see that you are obsessed, that you want to do this, that you have the energy to pull this off, and you will not always have the energy. But it's totally fine, but still, like, have this in mind. It will help you a lot in those darker times, I would say.
Thank you very much for that perspective. And when we were already at the topic of the whole market, the whole funding market currently in Austria, and what are the perspectives for founders? How does it look like? How healthy is the market currently? I see
You did a
laughter.
study on it, so I think you should go ahead.
So 2025 was not a strong year for the VC market. We saw that the volume of money that was invested in startups actually decreased significantly. But 2026 started really, really strong. So we saw an exit, Attractive, startup that is in the animal tech space, pet tech space, did apparently Austria's biggest exit so far. We haven't heard the exact numbers, but what we know is that a lot of business angels, Austrian business angels, were part of their investment team. So they will now get money back, which they will again invest into the ecosystem. And we saw that back in the days with Runtastic, what a fuel that is for an ecosystem if there is an exit being generated. We also now talked about already the 100 million euros deal of Waterdrop. That is an amazing, I think also one of the biggest rounds so far by an Austrian company. Also Gropius, I think it was this year, that did a similarly high round. So actually the year started off really strong. I think 2026 will hopefully continue this way.
It's lovely to hear. And is it more difficult to raise money as a female entrepreneur currently? What is your take on that?
So I think what's important to know is that statistically, if you look at mixed teams, they are more successful than non-mixed teams. So if you have a mixed kind of teams, it's more likely that you will have higher revenues, that you will actually have a shorter way to exit, and better team dynamics. This is statistically proven. Still, we see in the numbers that there's less money invested into female-led teams. But I think this will change. There are amazing initiatives that are really focusing on changing this. For example, Fund F, they are a fund that is also from Austria, where they only invest in teams that have at least one female in the team. There are global initiatives that are supporting women in entrepreneurship, and I think that this is one of the most the deepest pots that we can still tap into to have more women actually joining the entrepreneurial path, and making sure we have more diverse teams in Austria.
Can only agree. I think it's a structural problem, to be honest, and I think we need to tackle this very, very early, best in already school years, or maybe even earlier than that, with people going there and showing, okay, those are the success cases. We all have the opportunity, and we should bring especially female entrepreneurs into the market, because as you said, it's like less female founders, unfortunately. They're receiving relatively less money and they're outperforming. So it's a clear signal that we need more people. So go ahead, do it.
And what would be one advice, for example, if you talk to an investor where you can sense the feeling that they judge you based on your gender or your identity? Because I heard from many founders where they went into talks with either a VC or an investor, and they already from the get-go got a feeling something's off here. And what would you advise to those people?
Do your due diligence and go with an investor that you also feel comfortable working with. I think if you have a bad gut feeling, no matter why, is it because you feel like they have a bias against you or any other reason, if you already have a bad gut feeling in the beginning, this will most probably not get better. And I mean, then it's the loss for the VC if you're a great founder and you don't want to work with them. Also, venture capital funds fight for the best founders and to be in the best deals.
Fuck them, keep going and prove them wrong.
That's a perfect quote to go over to our rapid fire questions. And so the first question goes to all of you, and I ask you to answer it shortly. So, same question, same situation, three perspectives. A student comes to you and says, I want to raise venture capital money. What is the first thing you would tell them? Starting with you, Magdalena.
Well, if you're on a conference and you meet that student, I'd probably say, you send me your pitch deck and we will set up a call because there are so many people approaching us as a VCs. But I think the question would be, why do you want to raise VC? Is this actually the capital that you should currently look for? Or is this just because there was another startup raising a nice round and you just want to have the brand backing you? Because it definitely has to be a fit. Yeah. So I think you should ask your question, is it better to go for a VC or a business angel or family office? There are different ways of how you get the funding. Also, you mentioned Hannah grants can be something pretty good to start with. So I think I'd say, why do you want to raise VC and ask yourself the question?
Lovely. How about you, Hannah?
If they already have that answer, I would say understand your problem, have a clear 2-minute pitch, your elevator pitch ready. Do you have a team that actually complements your skills, that can actually solve this problem? And can you show some first traction, a couple of numbers that people are already believing in you and your idea?
I would also ask them why. And if it's compelling, just connect them to the right people.
Lovely. And what's more dangerous, moving too fast or waiting too long? Let's start with you, Michael.
Waiting too long.
Waiting too long.
Yeah, waiting too long.
Nice.
Make
Very
your
good.
mistakes and learn from them.
Lovely. Founder idea, what matters more? Hannah.
Founder.
Also founder.
Founder.
Gut feeling or data, what decides more often?
As a pre-seed investor, I have to say gut feeling, definitely, yeah.
Oh, wow.
Data.
Data, gut feeling, either or both.
So both.
Depends
On what?
on the situation.
Okay. And what is last but not least, what is one thing students worry too much about and one thing they don't worry enough about? Whoever wants to start.
Sorry, could you repeat?
What's one thing students worry too much about and a second they don't worry enough about?
I think as a student, you worry too much about the perfect career path. You want to set up the right next step at the right time. But things are changing, markets are shifting. With AI, who would have thought, well, I studied, well, I don't think that either of us students was thinking, I will go for that AI company. We were more focusing on consulting, big tech companies, but you never know what's gonna happen like in 10 years' time. So thinking about your perfect career path might not be the right solution. Rather, be curious, go out there, try what works best for you, identify your own strengths, Because the strength, if you use your own strengths and you build on them, you will live a very happy, fulfilling life, because you will end up doing what you like and love.
That's wonderful.
So I will narrow it down to students that have already a startup idea. What they worry too much about is that if they tell someone their idea, that they might copy it. They're like, I get it so often that people come to me, I have this great idea, but I can't tell you about it because what if you will steal the idea? And if the idea is like so easy to copy, it probably you should think again about it. And if you tell me your idea in 2 minutes, I will never ever be able to know all the processes that already went through your mind to replicate everything that you already did in that space, etc. It's not about the idea, it's about how you implement it, and talking about it actually can lead to amazing connections, to amazing feedback, and to help you get further. So if you have an idea, talk about it.
I think add to that, there is this German coffee shop which scaled like crazy, and their concept was like, sell cheap coffee and bring them a convenient experience and people will actually buy your product. I think the idea is not too special, but the execution was. So I think that's adding to that. For myself, I've been in your shoes. I would not over-optimize for the perfect CV, for the best consulting internship or IB internship, whatever. Find what you're deeply passionate about and just do what you love, because that's the best outcome you could wish for. And it's like optimizing not for tomorrow, but rather for the next decade. I like to keep doing that, to be honest.
That's wonderful. Thank you very much for your time and for sharing your perspectives with us. Once again, thank you very much. And have a lovely evening ahead. I will go to the next slide, but first of all, huge applause for our guest today.